It's a view from the floor here at the New York Stock Exchange. I am joined by the one and only Peter Tuchman. They call him the Einstein of Wall Street. And there is always a lot to talk about when I see you. First things off, thank you for being here. Second, we got the latest inflation reading that came out. How do you perceive it?
Okay, so it came in at 4.4% versus estimations of 5, right? Personal consumer expenditure, right? So that kind of really gauges what kind of middle America, people who are living paycheck to paycheck, right? We know that, sometimes the market and the economy go hand in hand and trade in concert. Sometimes there's some bifurcation. And I think we're in that state now, right? We know that the economy is struggling because we've had oil sustained over $100 a barrel for what, 8, 9, 10 weeks already. And so while maybe the people on Wall Street who are invested in this market are not feeling that crunch as much because to them $5 gas or $6 gas is not so meaningful, but the rest of America is feeling it. And so we haven't really addressed that, right? We've been wrapped up in the conflict in the Middle East, wrapped up in oil at these prices, wrapped up in a market that for some amazing reason, that's a way longer story, is trading at once again record highs, irrespective of all the other things that have been tossed at this. So this number is a little better than expected number, right? And that's a good thing. I'm not really sure how to analyze that I kind of think, is it a forward-looking indicator that once the conflict is over, that things will settle down? Once oil gets back into the $80 range, we'll be able to restart this whole situation or not. Maybe that's what it is, or maybe the numbers don't really reflect yet what's going on in the inflationary landscape, as it were, right? I think that's probably more what it is, because oil, you understand this, that oil, we started this conflict at $63.50 a barrel, and an economy that was trading 3.5–4% GDP, and for every $10 move in oil, right, that's equivalent to 1% GDP. So we basically went from a fairly stable economy and reasonable price of oil to oil sustained over 11 weeks over $100 a barrel, and bringing the GDP down to flat, low growth, no growth, right? And so what does that do? Well, that changes the whole, once again, landscape of what the new Fed chairman is going to have to do. He's probably going to have to bump rates up first before he lowers rates. I know we were trying to set ourselves up for an interest rate cutting cycle, but things are different now. All bets are off as far as that story goes, right? So there's so many moving parts in this story. And so, if this is a little bit of a positive blip as far as that goes, I hope so. The market is not particularly responding to it at all. I think the market needs to, to get something better to grab their teeth on. But look, if the amount of money that people are spending on their day-to-day life, which is, I think, the nooks and crannies of PCE, is a little bit better than expected, well, that's a beautiful thing.
Oil, as we know, rising in prices. Iran and U.S. trading new attacks, new concerns. How should investors see this?
Well, look, I think we've been getting so many mixed messages on this thing. The war was sort of, I knew we won in non-nuclear Iran, and that's all fine and good. But I think that I don't think people played even the administration, no disrespect, but played their cards correctly on this one. I don't think they anticipated that the price of oil would be sustained at these high levels for this long. Right. And, I know Mr. Trump set the stage for this by going into Venezuela and getting all that oil, but maybe he didn't really understand that, the price of oil it's a global thing. It's not just because we have $12 trillion worth of oil now that we're going to be paying less for it. It's a price set by the global stage, right? So that didn't make too much sense. And as I described, it's affected the whole economy. We are literally trading oil above $100 for week after week after week. And think about it. I mean, just from a layperson's perspective, that's going to affect the person delivering your eggs. It's going to affect the building of the AI infrastructure. It's going to be affecting anything on a day-to-day basis on what whether it's summertime, people are going to be traveling. I mean, these are things, we live in sort of a little bit of a bubble here on Wall Street, and we're not living paycheck to paycheck. We're if you're in the market, well, your 401k looks really robust right now, even though 5-6 weeks ago it looked rather dismal. And so why did that happen? What changed? Well, the explanation that I use is the fact that last year in February, March, and April, we sold off 20.8% all around that tariff story, right? And that was fairly, and then Mr. Trump said, okay, nothing to see here. Let's buy the market. We were back to even within 4 weeks. and then we rallied back. And no, the large institutions were playing catch up for the rest of the year, right? They were underinvested in the market for the rest of the year, and that kind of what fueled that rally in 2025. My gut is that once we started getting such that the information we were getting around the conflict was not helping us at all. We had no edge, like because Iran was doing this, we said no. There was so much he said, she said going on that we couldn't even trade the market around that information because it was so confusing. So I think people basically said, you know what, I don't want to get caught like I did last year. I'm going to disengage and I'm going to buy the market based on earnings, about guidance, about the basic, the lifeblood of this market, and I'm going to disengage from what's happening in the conflict. The bottom line is the conflict will be over eventually. Is it a month or 3 months? I don't know, but nobody knows. And so I'm just going to start buying things that are on my shopping list. Like software was trading at 50 cents on the dollar, if not worse. They bought that right back up. All of the stocks that were on sale based on that sort of evisceration of AI and the AI bubble and all that kind of stuff, people just said, you know what, I'm going to start buying it. And suddenly we found ourselves 2 Fridays ago and S&P back up to 7,000 when we were at 6,300. And now we're at 7,500. So once again, bifurcation. We're trading at totally, what's happening economically is not reflecting in the market. And what's happening in the market is not reflecting in what people, how your general Joe and Jane are living their life. And so we don't have enough information to be able to help those people in middle America who are living paycheck to paycheck. And we know that the market is sort of on a road of its own, into the fourth dimension.
So quickly sum it up for me, Peter. What is driving the markets right now? Geopolitics, Iran, earnings, something else?
AI, secondary, tertiary AI story. The AI story has not changed. The data centers are being built. They're not being kicked down, the can's not being kicked down the road. You've got all the other sectors, secondary and tertiary sectors that the CapEx expenditure is still there. They're holding firm on that. Also realize that when you have when you have the plan to build these data centers, they don't just suddenly pop up in 5 years. It takes 5 years to build them, and along the way, all the communities, wherever they're going to be built, are going to benefit from that economically, right? The builders and the contractors, the people who are owning little bodegas who are going to feed the workers, all that stuff is part of the economy, right? And so I think you're seeing all of that. You're seeing energy, and you're seeing a lot of, we know that Jensen Huang said the only catalyst or problem we're going to have in the next phase of this AI build out is going to be the energy thing. And so we know that that's something that it needs to be addressed. But even though oil is trading at these higher prices, I think that they've gotten a handle on it. And so I think it's AI. And there's one other little bit of a thing. It's kind of like a peace initiative. If you go back, Tim Anderson, who's a wonderful historian in the market, illuminated me to the fact that in 1980, when we were in the Cold War, right, and the Berlin Wall was still up and Russia was still the Soviet Union, and the Dow was trading at Dow 3000, we made this initiative to sort of a peace initiative globally. They took down the Berlin Wall and they broke down the Soviet Union, and there was sort of a sense of peace globally. And the stock market went from Dow 3000 to Dow 4000 and higher, which percentage-wise was a massive move. And so I think that we're feeling, if we have a denuclearized Iran, and when all this is said and done, and we're back playing in the playground with China, and we're the Middle East are now all our buddies, and everybody's cool, then we're going to be in a landscape that is a lot more globally friendly. And I think that that's what the market's responding to.
A little history, a little insight. That's why they call you the Einstein of Wall Street. Thank you, Peter.
Absolute pleasure. Thank you, guys.
And that'll do it for us here at the New York Stock Exchange. I'm Michelle Yu. Thanks for watching.